asked about our special long-term hard money loan financing. It's basically a hard money loan at a relatively low interest rate for a 5-year term. Now, this loan works fantastic if you're buying houses and wanting to rent them out and create a cash flow for yourself, but you either don't have the credit to get traditional financing, or perhaps you have too many single-family house mortgages already in order to qualify for a new mortgage. So one of our borrowers, one of my best customers actually, is using this loan on a very regular basis. He's going to the trustee sales and buying houses at auction. And for this example, we'll say he's buying $100,000. He's buying a house for $100,000, and because when you buy at a trustee sale or an auction, and when you pay cash, you expect to get some kind of a discount. And so this house is a $100,000 house. He immediately refinances with us at about a 70% loan to value. So he's pulling $70,000 out of the house immediately. His payment on that is just $577 a month. And immediately what he does with this house is he finds himself a lease option buyer, or at least somebody that's going to buy rent to own. And so the structure that he puts in place with this rent to own buyer is he sells them the option to buy the house for $120,000. They have the right to buy the house for $120,000. He then gives them a lease for $1,000, which, by the way, is actually lower than market rent. And he's asking the seller to come in simply with $30,000 down. And you'd be surprised how many people have cash but no credit. Especially, and I'll tell you the dirty little secret is, a lot of his lease option buyers are people that have lived in their house for 2 years while the bank is thinking about doing a short sale, and they've been saving monthly payments. They've been able to save up their mortgage, what otherwise would have been their mortgage payments, and then they dump their upside-down house, and they buy usually a nicer house in a better area and pay less, but are able to put a nice little down payment down. And that's basically the target model for how this loan works. So my client here is buying decent houses at, I'd say, a decent price at auction. We're giving him the leverage for a 5-year term so he can go out and sell that house to a lease option buyer, tenant, for a large down payment. He's got a nice monthly cash flow, over $400 a month in cash flow, and he's basically got every dollar that he spent to put to buy the house out of it. So, real quick, for those of you math majors out there, if you've got $0 invested and you've got $423 a month in positive cash flow, what's the rate of return on that? To infinity and beyond.